the challenge of being an active investor, you can set levels in markets where you get in, you get out, and you think, well, if it kicks on, I'll get back in again. But that indecision to get back in, or the need to see more proof as a human being, can sometimes weigh reasonably heavily on you. Go, I'll just look for a little bit more, and then it can run. And then you get into it's already gone too far. I'll have to wait for a pullback. It doesn't pull back, it goes again. And then you're chasing the thing higher and paying way too much for it. And I've had, as all investors have, had that experience, I'm sure. So one of the things I like to use for entries in trades now, I like to sell puts, because it's just going to get me in if it hits that price, and if it doesn't, I'm picking up a couple of percent on it anyway. I'm a bit annoyed on a few trades where I've picked up a couple of percent by selling the put and missing out on 20-30% on the overall asset moving up. But I find that a really good low emotion way of getting in the market. And don't feel sorry for me, I'll make ends meet anyway. But they're real mistakes that as an investor I've made, and I wouldn't say I continue to make, because I've modified my strategy to include selling puts to get set, rather than sort of sitting on the sideline waiting for a trade level. But there are a couple of examples in the murky well of investing experience that I've had over the last 30 plus years.